Welcome back to Portfolio, everyone. Abbott Laboratories, ticker symbol ABT, just got FDA approval for their new 15-minute test. And what this test does is it can test to see if you have the virus within 15 minutes. This is huge news for the company and the overall economy, because once this quick rapid test comes through and we can get millions and millions of people getting tested every single day, this will help ensure that we can remain open, continuing to operate our businesses, and of course ensure that people are safe all across the country. So this is the first ever rapid test. Abbott just got FDA approval yesterday, and there's a deal with the government to purchase $750 million worth of doses, which is around $150 million, because this is going to cost $5 and you're going to get your results within 15 minutes. This is brand new technology. It just got FDA approval, and when this news broke, Abbott Laboratories saw an over 8% jump in share price today alone. So in this video, we're going to discuss Abbott, look at ticker symbol ABT, determine if it's a buy now, see if this future growth is going to happen following this big news, and discuss how we think the company is going to benefit over the long term. And we're also going to take a look at what different analysts are saying about the company. This news is very fresh. It just came out today, so we're going to see what analysts were predicting before this news came out to see now with this of course added benefit with their new FDA approved test, if we believe the company is going to grow over the long term. So of course now with everything that's going on in the world, of course this virus has really shut down the economy, and of course we are reopening slowly each and every day, but now with this rapid fire test, it can hopefully ensure that we can remain open. A big worry for overall investors is that if the economy were to close once again, there may be another big large drop in the stock market. But if we can remain open, the stock market will hopefully continue to go up, and of course we can see some nice overall returns. So this new deal with the government ensures that they're going to buy $750 million worth of Abbott's COVID rapid tests. And what these are these are for 150 million tests. So this is going to be announced very soon. But what it really does is it just shows that now we actually have a technology where we can get rapid results without needing a lab. So this gear, you can get the results in 15 minutes without the need for laboratory gear, making it ideal for nursing homes, schools, and other areas with high-risk populations. So of course it's for areas, of course, with people like elderly who are at highest risk, but it's also good to ensure schools can remain open, and maybe one day we can actually get fans in attendance of sports arenas, because now you can get a quick test before you enter the arena, and they can ensure everyone who enters does not have the virus, and when they get those results very quickly. So it'll be very interesting to see how fast they can mass produce these products. Abbott actually put out an estimate where they plan to have tens of millions of tests out in September, ramping production to 50 million tests a month in October. So that's absolutely incredible. We'll see if this company can fulfill these massive orders and actually get these tests out on the market, and we'll see how accurate these tests are of actually testing for the virus. So in this video, we're going to continue doing a quick analysis on Abbott to see if we like where the company is going and if we think this news makes it a nice buy now for portfolios. So this company is ticker ABT, currently around $111 a share. Like we saw, they are up 8% today alone from that nice share price jump because of this good news. Over the past 12 months, they are up around 24%. And if we take a longer term perspective, they are up 134% over the past 5 years. Take a look at their market cap, a very large company with a $182 billion market cap. Of course, trading very close to that 52-week high right now because of that news led to a nice run up. And of course, they are a dividend paying company with a lower yield at around 1.4% and a forward PE at around 31.73. So we're going to take a look at some key financial metrics for the company, take a look at their dividend safety, and see what analysts are expecting and what analysts recommend. So the first thing we're going to see is their performance. So in the past year, they've brought in a total return of 21.7%, just slightly outpacing the overall market and beating their individual industry. If we take a look at a long-term perspective, this is a dividend-paying company, so we're going to include dividend returns. Their total return over the past 5 years is 158%, beating their industry once again and outperforming the market by around 60% greater return than what the overall market would have given you. So this company's done a nice job performing very consistently over the past 5 years, growing revenue each and every year, and this is a company that has returned nice gains to shareholders. So, of course, we're buying for the future. We like to see that they've performed well over the past 5 years, but we're buying now to see how they're going to perform moving forward. So analysts are expecting 26.3 forward annual earnings growth over the next 1 to 3 years. And if we take a look at this chart, it kind of recommends and what analysts are showing for the future growth of the company. The top blue line represents total revenue and the bottom light green represents earnings. So we can see here over the next couple years, they expect revenue to grow at a steady rate and earnings to follow that same rate. And over the long term, I'm going to say 3 to 4 years out, they continue to see revenue growth year over year. This is a dividend paying company. So if we take a look, their current yield is around 1.4% with a payout ratio of 44%. Very sustainable, a lot of room left over to maintain, money within the business to grow operations, continue to research and develop, and there's also enough money left over to grow that dividend continuously year over year. They have been growing their dividend at around 7.8% annually over the past 5 years, which is a beautiful dividend growth rate. We like to see dividend growth rates between 5 and 10% for companies who want to do it consistently for the long term. And of course, they've been growing that dividend for 7 years. So not the longest dividend growth history, but they've been doing it for the past short term. With regard to dividend safety, their dividend is considered safe right now with a ranking of 71. So kind of unlikely that that dividend will be cut anytime soon. Now we have to take a look at what analysts are expecting. This news is very fresh. These analyst reports have not included today's news, which is what I like. I wanted to see what analysts were expecting before this good news comes out. Of course, when good news comes out for the company and there's a lot of optimism about their operations, and especially news like this where there's going to be such a high demand for this rapid test that it may help really surge revenue and earnings over the short term, I like to see what analysts were expecting before, because now with this positive news and this new kind of stream of revenue for the company, this can just kind of add on to what analysts were expecting. So the first report we're going to take a look at actually does recommend a buy. 19 analysts were surveyed, 7 strong buys, 7 buy, 4 hold, and only 1 sell. So overall buy rating from the first report for ABT. Over the past couple earnings surprises, they've seen all positive or inline surprises. They've done a nice job as of late to actually beat earnings by double digits over the past 2 quarters. But since then, they've always been pretty consistent with their earnings, kind of matching what analysts were expecting. And future revenue growth falls in line with the previous estimate we just saw. They expect revenue to grow each and every year over the next 2 years. And in 2021, they actually forecast over 13% growth in revenue. If we take a look at price targets for the company, this next article shows that they actually represent a price target at around $110 a share for ABT over the next 12 months. That actually represents around a 1.5% downside from where it is today, where it's currently being traded at $111. So analysts aren't really expecting a lot of price movement. And this was before the big news came up, which led to this big surge. So it'll be interesting to see how they perform if they can beat this analyst expectation. Optimistic analysts saw the price of ABT at around $125 a share. And if this company can perform and actually, really provide accurate tests to the public and grow that 15-minute test market, then we may see that 125. We may see a price of ABT over the next 12 months surge past 125 and up to maybe 150, all depending on really how successful this new test is. But once again, even with that slight 1% downside in price target, they are still showing a moderate buy on the company, 10 buys, 2 holds, and 1 sell, which is great to see. The final report we're going to take a look at is a different price target from MarketBeat, which shows a buy. Over the past 180 days, every single time they did this report, all buy ratings for ABT. With regard to their analysts, they had 11 buys, 4 holds, and 2 sell. So once again, another moderate buy. Nothing too crazy, no strong buys from any of these reports, but overall, even before this news came out, they still had a buy rating put on ABT. And this company has a price target set around 106, which represents around a 5% downside from where it is today. So even though it shows a decline in share price over the last 12 months, these do not take into consideration that huge news that we had today, which is of course a big deal where they brought in $750 million, of course, from that first deal alone. And of course, the opportunity to expand their testing, of course, distribute that test across the world, not only within the United States, and see a lot of revenue growth moving forward over the next 12 to 24 months. The last thing we're going to take a quick look at is ABT's financial statements to see if we like the company where it is today. If we look at their financial statements, over the past 5 years, they've done a nice job of growing over the long term. You can see here somewhat steady revenue growth each and every year. They did see a slight jump between 2016 and 2017, but overall consistent upward trend with regard to total revenue. Next, we're going to take a look at net income to see how that's been growing over the long term. And once again, we see very mixed net income. So 2015, they did see a giant spike in net income, bringing in over $4.4 billion. But of course, they kind of went back to normal in 2016. 2017, they saw a massive decline. They had to pay a huge income tax bill in 2017. But over the past 2 years, they've been recovering and growing net income each and every year. So revenue statement, not too exciting in reality. So they have been growing revenue. Net income has been on kind of a mixed trend with slight upward trend over the past couple of years. But in reality, nothing too exciting from their income statement. No double-digit revenue growth year over year. You can see revenue is growing, but not at a super fast amount. So very common income statement. Nothing to be amazed by and nothing to be too worried about from this income statement. If we take a look at the balance sheet, they are currently showing around $17.2 billion of total current assets. Meanwhile, their total current liabilities are around just shy of 11 billion. So they do have a current ratio above 1, current ratio above 1.5 right now, which is great to see. That's the kind of the range where we like to see these companies with a current ratio of at least 1.5, just to show that they can deal with all their total current liabilities within the next 12 months without worry or without panic. Overall, though, if we take a look at their total assets of around $68.7 billion, compare that to their total liabilities of only $37.9 billion, it shows that they do have a very strong overall ratio. But if we take a deeper look, of their total assets, $23 billion of that is in goodwill. So goodwill is an intangible asset. There's no cash value, or they can't get cash for their goodwill. So even though it's considered an asset on the balance sheet, this goodwill cannot really be used to pay off debt. So if you subtract the goodwill from the overall assets, that puts them at around $45 billion in total assets. Of course, there are other intangibles, but we're going to ignore those just for a second, which shows that around $45 billion of total assets compared to around $37.9 billion of total liabilities. So taking that into consideration, the overall ratio is still positive, it's still above 1, but it's not as great as when you do include goodwill, which really isn't a solid metric to have in that equation. Overall, balance sheet, nothing too worrying over the short term. Their current ratio is sustainable. This company, we like to see growing equity in companies over the long term, and you can see here they do have that over the long term, similar trend as with regard to revenue. It's kind of a big spike between 2016 and 2017, and then over the past 3 years, somewhat flat, but still total equity over the long term is on an upward trend, which is great to see. So once again, nothing too crazy with regard to their balance sheet. In no way the best balance sheet on the market, but their balance sheet is not too worrying at its current position. So this is a company where they have a lot of huge growth potential. This big news of this rapid test can really help the company grow. And of course, once they can distribute this test across the United States and across the world, they will see a huge future benefit. So thank you for watching, everyone, and I'll see you in tomorrow's video.